A lot has happened in 2.5 hours. That's the last time I was here. So it's time for update from the world of business, and you're getting it here on Business Incorporated. Here's what we have coming for you on the program. We can tell you that there's now a compulsory Kenya welfare levy on diasporans. Cameroon cocoa output drops 11% year-on-year in September. And truck drivers in Ghana's port city of Tema threaten boycott over neglect of stranded colleagues amid closure of border with Niger. We'll give you the full details of that and a whole lot more. Let's start with the market, giving you how the market look at intraday. We start with Nigeria, looking really green there, 0.15%. And South Africa, too, is also green. Other marginal there, 0.06%. We look at other markets. Egypt is closed on Friday, but it's 0.79%. Kenya is undecided, but it seems to be more on the green side. That's for the market. Let's head over now to another market. That's the Middle East market, and see how that's looking at intraday sentiment at the Middle East market. Before we go there, let's head to Nigeria's stock market and see what's going on there at intraday, that positive sentiment. Who's driving it? We have joining us for that conversation, Tajuddin Olayinka, the Chief Executive Officer of Wyoming Capital and Partners. Mr. Olayinka, good afternoon. Good afternoon, Mr. Olayinka.
Good afternoon, I can hear you. Good afternoon.
Oh, great, I can hear you now. So we see that the market is rebounding from the negative sentiment it closed with yesterday. Who are those driving this positive sentiment?
I think largely, Ohando is actually pushing it up. Of course, and we have also seen some other, just few banking stocks and also cement. In fact, same is bad. There are a couple of stocks that actually doing that, but not many of them as we used to have. It's just more of a balanced market at this time. Of course, the leading stock there is actually the Ohando.
So in recent times, we've seen that the banking has been the one driving a whole lot of buying sentiment, and the oil and gas have been kind of quiet. Can we say it's now the turn of oil and gas?
Yes. Oil and gas has also moved very significantly. They've reached a level where we can say that yes, they have actually. I won't say they have reached their peak, but of course they have recorded appreciable movements in terms of price gain. So, but yes, you can say they are tall, but it moves either way. It could be banking stock today. It could be oil and gas tomorrow. So any liquid stock will normally drive activities in the market, and that's what we are seeing. Banking stocks are actually more liquid, and that's why you see them lead the market more frequently.
So how do we expect the market to close? I hope there won't be last-minute profit taking.
That is something you can really not predict, about the market. Yes, as at this time we see that it's just fairly balanced. Not that is strongly bullish, but of course we still have a good and a green market. It may close because before now the index was actually the gain was actually more than what we are seeing at this moment. So it can still close in the negative territory for profit taking, and it can still close in positive territory for those who are actually doing bargain hunting. So I think we still have a fairly balanced market.
Thank you so much, Mr. Tajuddin Olayinka, Chief Executive Officer of Wyoming Capital and Partners. All right, moving on now, let's head to Berlin, where Lars is standing by to tell us about that deadline that Detroit has to reach a scary auto workers' General Motors deadline with Ford and Chrysler. They're threatening a strike. We've been talking a whole lot about strikes in the UK, and it seems to be catching up in the EU now. Those three companies are in a hurry now to make offers in order to avoid that strike. Let's have Lars join us now to give us the details. Hi, Lars. Good afternoon. What are the details? What's the update on this threat?
Yeah, hello, Ini. Thanks for having me. Well, 2 out of the 3 car makers have now made an offer to their workers, who are all represented by the United Auto Workers Union, or UAW for short. Here's some details. Ford is offering a raise of 9% for all workers. Add to that a 6% lump sum payment meant as inflation relief. Just hours later, General Motors followed with its own offer. They would give workers a 10% raise and pay out 2 lump sum payments of 3% each. So both these offers are very close to each other. The third Detroit car maker, that would be Chrysler, owned by Stellantis, said they will make an offer very soon as well. I guess it is quite likely that it will work around the same numbers as the 2 competitors. And while Stellantis seems a bit late here, it is worth pointing out that GM and Ford are also quite late in the game. The threat of a major strike has been made a while ago, and we are now only days away from a deadline, which is next Thursday. And if that deadline expires with no agreement between the car makers and the union, a strike is more than likely. After all, 97% of union members have voted for such action, and that could cost the car makers and related industry around $5 billion, according to some economists. And right now, it doesn't look like an agreement is in sight.
So what do they want? I mean, they have these offers.
Oh, they are not mincing words, calling the offers from GM and Ford, quote, an insulting proposal that doesn't come close to an equitable agreement for America's auto workers. And just to make it clear that they are serious, they're adding, the clock is ticking, stop wasting our members' time, tick tock. So what is the UAW hoping for? They were initially asking for a raise of 46% for their members. Now, their counter proposal now sounds a little cheaper, but it is complicated. The union now demands a 20% immediate wage increase, followed by 5% annual wage hikes and a bunch of assorted benefits, including scaling down to a 32-hour work week. Sounds like a lot, but the unions are pointing to the car companies' recent profits, and they're saying workers deserve their share.
Well, this is what inflation does to union and to workers. But how's the market reacting to this? I wonder what's happening to their stocks.
Well, looking at early trading, we're seeing more of what we've seen over the past few days. Pressure on markets on the one side due to worries about the weakening Chinese economy, and on the other side, worries about inflation in the US and possibly another rate hike. Also, we've seen some interesting moves in high tech. Apple is under pressure as China has banned its products in government offices. That has led some investors to sell Apple and its suppliers. And we'll have to see how much of this will later carry on in European and finally in US trading on this last trading day of the week.
All right, Lars, thank you so much for updates all through the week. Have a great weekend. All right, now let's move to other markets. In Asia, we can say that markets were low on Friday as Japan released revised second quarter gross domestic product figures. Looking at the numbers now, Japan's Nikkei 225, it extended those losses by 1.16% at 32,606.84. Kospi is also down marginally at 0.02%, 2,547.66. The Hang Seng Index is unchanged for today at the close of trade. Let's see others now. Shanghai Composite is also red 0.18%, 3,116.72. In Australia, it's also a red market, 0.20% at the close of trade. United States stocks futures were low on Friday morning as Wall Street heads for a losing week amid concern that the Federal Reserve could raise rates more than expected. Dow Jones Industrial Average futures dipped 49 points. Futures tied to the S&P 500 also. Let's look at the numbers there. You have the Dow Jones is down 0.20%, 34,777. S&P also down. What a red Friday today is. So, well, thank God for the NGX, 0.23% for S&P 500 at 4,495. NASDAQ is also down. Well, not as bad as yesterday, but still in the red, 0.30%. Well, we do have Maria Bird with the details of Thursday's trade, and she gives us that.
U.S. stock market was mixed on Thursday, as the Dow Jones was modestly up at 0.2%, the S&P 500 was down at 0.3%, and the heavy tech Nasdaq was down at roughly 1%. This is mostly due to the tech giant Apple that has shown a 3% slump over the past few days. It is also reported that China has banned the use of iPhones for government officials. This ban could extend to state-operated companies. This could have a major long-term impact on the company. It is also clear that investors are watching to see the Federal Reserve, as the unemployment rates have shown a decrease over the past few months. This decrease could mean that the U.S. economy is resilient and that interest rate hikes will continue to stay up for a bit longer. Investors are continuing to watch to see how the Federal Reserve will respond as the markets continue to fluctuate.
Thank you, Mario. We'll certainly continue to watch that space. Now, let's go to the global oil space. Prices hovered above $90 a barrel on Friday. Back to that, yes. On track to end this week higher as investors chose to focus on tighter supply despite broader macroeconomic uncertainty. Brent crude futures were up 71 cents to $90.93 a barrel, while U.S. West Texas Intermediate crude was up 65 cents to $87.52 a barrel. Both oil benchmarks hit 10-month highs this week after Riyadh and Moscow extended their voluntary supply cuts of a combined 1.3 million barrels per day to the end of the year. However, both benchmarks extended Thursday slightly lower amid violent trade on multiple signals, warning of weaker demand in the coming months. Data on Thursday showed overall exports and imports in the world's second largest economy fell in August, as sagging overseas demand and weak consumer spending squeezed businesses. In the commodities market, gold firmed on Friday as the dollar retreated from highs, but bullion was still en route to a weekly fall as traders looked beyond a widely expected pause by the Federal Reserve this month to focus on persistently resilient U.S. data. Spot gold was up 0.3% to $1,924.98 per ounce, but set for a 0.7% weekly fall. U.S. gold futures rose 0.3% to $1,949. Meanwhile, higher interest rates boost returns on competing safe haven treasury bonds, which are set for their first weekly rise in 3, making non-interest-bearing gold less attractive. In other metals, silver rose 0.6% to $23.08 per ounce, and platinum gained 0.2% to $905.34 an ounce. Let's take a break now. When we come back on the program, more stories from the African continent. To stay with us.
It's a sign of the times. A reflection of conversations from the streets to the halls.
Interesting collection you have here. Thank you.
That get to the walls. If they could talk, see and hear the limitless creative.
So I think the moral of it is that when you make a vow, you must ensure that you fulfill it.
On Art House. Stay connected to the world with Channels TV Podcast and get all the trending stories. Simply log on to channelstv.com, click on podcast, select the program of your choice, and listen. Our podcast is available on Apple, Google, and Spotify. Tap the expertise you trust. Touch the stories that touch you. Anytime, anywhere.
Welcome back to Watching Business Incorporated here on Channels Television. We start with what's going on in Kenya, as all Kenyans working abroad will be required to make mandatory contributions to a state welfare scheme if proposals by the Ministry of Labour gets approved. A statement from the Labour Principal Secretary, Jeffrey Kaituko, mentions that every migrant working will be required to register as a member of the fund before departing the country for foreign employment. The scheme, known as the Kenyan Migrant Workers Welfare Fund, seeks to provide relief assistance to migrant workers, invalidity benefits, medical assistance, and survivor benefits when a migrant worker dies. If the bill is approved, Kenya will follow in the steps of countries like a large diaspora worker population such as the Philippines, Sri Lanka, Pakistan. We have set up similar funds. The Ministry of Labour estimates that Kenya has close to 4 million migrant workers, mainly in North America, Europe, the Middle East, and the Gulf region, as well as Australia. The survey also reveals that the bulk of Kenyans in the diaspora reside in the United States, the United Kingdom, the United Arab Emirates, Canada, Australia, as well as South Africa. In Cameroon, it's not so good news, as Cameroon has seen its cocoa output down 11.2% year-on-year during the 2022-2023 season, which officially ends on September the 7th, 2023. Official figures released by the National Cocoa Coffee Council shows that over the period under review, producers harvested 262,112 tons of beans compared to 295,163 tons in the previous session. The status reports published by the council explained that the decline was expected because of the vegetative rest period, coupled with the adverse effects of climate change and security situation in the northwest and southwest production basins. The low production came with a drastic drop in exports, representing 18.4% decline when compared to an updated figure of 228,920 tons during the previous campaign. One's ONCC explains that this decline happened at the time of implementation of the 2023 Finance Act, which introduced an exit duty of 10% of the free on-board value, equivalent to a royalty of around 150 cedis per kilogram exported. Other factors include the rising cost of agricultural inputs due to conflicts in Ukraine and illegal as well as massive exports to Nigeria. Well, in Ghana, it's also a complicated thing, as truck drivers in the Ghanaian city of Tema are threatening to boycott transportation of goods from the port in protest over abandoned colleagues at the border town between Benin and Niger. The move is in solidarity with over 200 Ghanaians who became stranded following orders from the Economic Community of West African States, ECOWAS, for the closure of the borders in opposition to the military takeover in Niger. Commenting on the situation, the Executive Secretary of the Joint Association of Ports Transport Unions, Ibrahim Musa, lamented the predicament of some of the drivers, conductors, and truck drivers, which they find themselves as their families beg for arms to meet their daily needs. It was reported that following the intervention of Ghana's ambassador to Benin, the border was briefly opened for just 2 hours and then closed again. According to truck drivers, this action was insufficient as many more drivers remain abandoned. And still in Ghana, the government is working on a legislation to regulate the production of carbon credits at sites in the country, at lands also, and natural resources. The move follows steps taken by others on the continent, from Zimbabwe to Kenya, to implement laws to ensure that both the government and local communities get a greater share of benefits from the production of offsets, with most of the money earned to date having flowed out of the nations. The African Union, in declaration at the inaugural Africa Climate Summit, which just concluded in Kenya, committed to implementing a mix of measures that elevate Africa's share of carbon markets. And in Ethiopia, great expectation coming as the government drives to boost Ethiopian wheat production expected to hit 27% increase in output this season, enabling the Horn of Africa nation to export grain. Economic reforms by Prime Minister Abiy Ahmed's government include a planting campaign to wean the country off imports. The efforts have borne fruit, and Ethiopia did not import wheat in the fiscal year ended July, helping save $1 billion in foreign exchange. 3 weeks ago, the African Development Bank Group awarded grant funding totaling $84.3 million to Ethiopia to advance wheat production and increase farmers' incomes. The grant comprises of $54 million from the African Development Bank, the bank group's concession leading window for low-income countries, then $20 million from the government of Netherlands, $10 million from agribusiness firm OCP Africa, $300,000 from the Global Center on Adaptation. The Ethiopian government will contribute $10 million in counterpart funding for the projects. And then in Zimbabwe, the recent adjustment in fuel prices has increased fears of triggering another wave of price increases across the economy amid calls for adjustments, which places the stability goal at the heart of policy implementation. This follows a significant increase in the prices of fuel announced by the Zimbabwe Energy Regulatory Authority on Thursday. Well, the statement released by that authority indicates that fuel prices for diesel and blend is effective September the 7th, 2023. For diesel goes as high as $1.76. That's about 8,160 Zimbabwean dollar per liter. Petrol, $1.65, which is about 8,160 Zimbabwean dollar. The prices for September based on M1, and they'll be effective up to the 4th of October. Prior to this time, a liter of petrol was being sold at around 1,055 Zimbabwean dollar. That's about $1.55, with diesel hovering around the same range. Well, the energy regulator said that the public and operators may sell petroleum products below the prescribed prices depending on their trading advantages, and should display prices in a prominent place as provided for by the fuel pricing regulation. Now, some good news and bad news according to the United Nations Food and Agriculture Organization, FAO. The organization's food price index has not been on this level since March 2021. And it says that prices have declined by as much as 24% compared to March 2022, when it was its all-time high following Russia's full-scale invasion of Ukraine. In a statement by the FAO, the drop in food prices reflects decline in the price indices for dairy products, vegetable oils, meats, and cereals. However, global price of rice has reached a 15-year high in August after top exporter India banned some overseas sales of the grain. While global food prices eased in August, those of rice rose in August 9.8% compared to the previous month. And this, according to the FAO, reflects disruptions in the aftermath of a ban on India white rice exports. Well, that's the much we can take on Business Incorporated today. Thank you so much for being a part of it all through the week. We'll do it again next week. I'm Ini John Mekwa. Have a great weekend.